We had Tom Lee on the broadcast. I don't know if you saw this earlier today. And he effectively said Bitcoin at $111,000 is headed to $200,000 effectively by Christmas. What do you think of that?
Well, most of the equity analysts that follow our stock have target prices for Bitcoin, and they're all north of 150. Bitcoin represents a digital transformation of the capital markets, and so the more people know about it, the more they get educated on it, the more companies embrace it, the higher it goes. You can't make any more of it.
Hello everyone, this is BTC Insight, and welcome to yet another deep dive into BTC Insight. Before we jump in, make sure to hit that like button and subscribe if you haven't yet. You won't want to miss this.
Lee begins by pointing out that the bond market is effectively sending the Federal Reserve a warning. Right now, bond yields are signaling that the labor market is straying further from the Fed's employment target than inflation is from its inflation target. That's a big deal. Why? Because it means the market believes the Fed should be more concerned about weakening jobs than about sticky inflation. According to Lee, the bond market is already pricing in 3 rate cuts this year, while the Fed is only openly discussing 2. That gap matters.
The bond market essentially is saying that the labor market is now deviating further from the Fed's target than inflation, and therefore justifying actually one additional cut. So I think that makes sense to me, because we know inflation, and that August CPI gets reported this week, may be elevating, but that the markets are going to begin to view that as transitory. Whereas the weakness in the labor market, as you know, once it begins to weaken, it's very hard to reverse that momentum. So I think it's important for the Fed to intervene quickly.
And are you of the view 3 times this year, minimum?
Sense. To me, if I look at what the bond market's pricing, which is now essentially 3 cuts, and the Fed is talking about 2, the bond market is saying the Fed is behind in terms of how they're perceiving these changing conditions. And so I think on the 17th, when the FOMC makes its rate decision, I think there is a chance the Fed responds to that. And if it does, it's going to be good news, because the bond market is going to take comfort from the Fed recognizing the labor market's weakening. The long end is something to wonder about, because we know globally, the 30-year especially has crept up. And we know that the Fed and other central banks have acknowledged that monetary policy has a lot of influence up until 5-year. You know, the correlation is 90%. But once you get into the 10-year, the bond market is making its own decisions about growth. That is something kind of troubling. But on the other hand, I think mortgage rates could come down sharply, because the spread between the 30-year mortgage and the 10-year is over 300 basis points. The 50-year average is around 160. So the Fed, if it begins to resume cutting, and the bond market views that as essentially an easing trend, the 30-year mortgage could drop 150 basis points if the 10-year doesn't even move. That's a lot of easing for the housing market.
That is a big deal. And I know you're not an economist, but you have to have a view on where you think the economy is headed. If we get these Fed cuts and the economy, doesn't take a steep leg down, despite what we've seen with the jobs market, that's one thing. But if we get these cuts and you're also dealing with a slowing economy, potentially even a recession down the road, I mean, that's a completely different story. You looking at these Fed cuts as for good reasons, because we can do it and get away with it and it's going to improve the economy, or you looking at this and thinking, I worry about what comes on the other side?
Michael Saylor begins by pointing out a striking reality. Nearly every equity analyst that covers MicroStrategy assumes a Bitcoin price north of $150,000. For Saylor, this isn't speculation. It's the logical outcome of Bitcoin's nature as a scarce, digital, non-replicable asset. Unlike traditional commodities or fiat currencies, Bitcoin cannot be inflated or diluted. The more people understand this, the more adoption grows, and in turn, the higher the value goes. This year alone, MicroStrategy has raised $19 billion, directing all of it into Bitcoin. Just recently, Saylor announced a $217 million purchase, adding nearly 2,000 coins to the company's balance sheet. To put this into perspective, when MicroStrategy made its very first Bitcoin buy in 2020, it was $250 million. Everything the company had saved in 3 decades. Today, those kinds of purchases are routine, showing how dramatically the company's strategy and financial capacity have scaled.
Effectively said Bitcoin at $111,000 is headed to $200,000 effectively by Christmas. What do you think of that?
Well, most of the equity analysts that follow our stock have target prices for Bitcoin, and they're all north of 150. Bitcoin represents a digital transformation of the capital markets, and so the more people know about it, the more they get educated on it, the more companies embrace it, the higher it goes. You can't make any more of it.
Right. That may be all, but in terms of just what you're seeing in terms of flows and whatnot, that would get it to $200,000 by the end of the year.
Yeah, great flows from the ETFs. BlackRock is showing record numbers. Our companies raised $19 billion this year.
Right.
All of it went into Bitcoin. We just announced $217 million of Bitcoin purchases this morning before I walked onto this set here.
Wait, 217 million this morning?
217 million, just slightly less than 2,000 Bitcoin. Our first buy, and we were the first public company to buy Bitcoin, we bought $250 million of Bitcoin, and that was like all the money we'd come up with in 30 years.
Yeah.
And this was just a short week, 4 days.
Okay, so can I ask you this? For those folks who are investing in MicroStrategy, or strategy, I should say, as opposed to Bitcoin, you are effectively a levered bet on Bitcoin. That's what this company has become.
That's
Fair?
correct.
Okay, so the question is, on the way up, it would be it's fabulous, right? Because everything becomes, multiplied. What happens on the way down, if there is a down?
Well, a lot of investors, they have to buy equity, and so we offer Bitcoin-backed equity, or they need to buy credit, and so we have 4 Bitcoin-backed credit instruments, preferred stocks. So the ones that are risk-averse, that want the exposure, are buying the credit, like Strike, which has got the upside with some downside protection. The ones that are buying the equity want 2x Bitcoin. They want more volatility, they want more performance, and they see it as a more efficient way to get that exposure. Turns out that 99% of the money in the world is mandated to equity and credit. Most of these professional investors and most of these passive funds, they can't buy the underlying commodity even if they wanted to.
Right, but just to understand it, if in fact, even if there was a crypto winter, and we'll call it a winter because that suggests there's still a potential summer again, at what numbers and levels does it become complicated at which you start to have to sell things?
You know, we constructed a pretty bulletproof balance sheet. I would say we have a PhD in leverage by now because we lived through the last crypto winter. We went from 6,000 to 16,000. We were buying Bitcoin at 16,000. We used to use senior debt, and we had some margin type loans. We rolled out of that to converts, and this year we really have started to reallocate to preferreds. And preferreds are the best kind of leverage because they never come due. So I think we're fine right now because substantially our leverage comes from preferred stocks rather than from debt at all.
Michael Saylor isn't just betting on Bitcoin. He's building the financial architecture for a digital age. Whether you see it as bold or risky, his conviction has already reshaped how Wall Street thinks about digital assets. And if his thesis proves right, MicroStrategy's story will be remembered as one of the most important financial experiments of our time.
That's it for today's look into BTC Insight. If you enjoyed this deep dive, hit that like button, drop your thoughts in the comments, and subscribe to stay on top of all the latest insights. Keep questioning, keep learning, and we'll catch you in the next one.